What would you say are the top three things that businesses normally get wrong in related to their finance?
It comes down to knowledge and what is perceived as expensive. But whenever you're talking to people about funding equipment, they will, the amount of times you'll see like people who own large buses, if you talk a large sort of 50-seater coach brand new, you're probably talking £200,000, but or more. But the amount of people who will buy that bus, but fund it over a 4-year cycle, as an example, that will be hugely cash flow disadvantageous to them. But they'll keep the bus for 7 years, or they'll depreciate it over 7 years. So if you know you're going to keep it 7 years, you're going to, and you say its economic useful life is 7 years, why have you funded over 3 or 4?
Okay.
So that's one thing I always see as always being a problem, because everyone will go, oh yes, but I'll have 3 years further down the line that I
might not survive to that point. Yeah, I'm with you.
But
I think part
if
of that,
you've hampered your cash flow and don't survive 4 years, then you're stuffed.
It's when you don't know what you don't know. Do you know what I mean? So
Exactly.
for instance, if they don't even know that there's someone they can ask or talk to, it's so that's one. Are there any others that you kind of see common?
Well, the second one sort of sits on the side of that. So you take, you'll find a lot of people who've got seasonality in their business. So you might have, again, take example of bus and coach, because there's a big talking point about it at the minute. But bus and coach, from pretty much November till February, some of them, if you're in coach world, you pretty much do nothing. Some people just do nothing at that point in time. But you'll have someone who's funding a bus and they've got a hire purchase agreement, but they'll also have an invoice finance line. So technically you have to take money from your invoice finance line to pay your hire purchase, but you're paying interest for that and interest for that. However, if you'd actually spoken to a funder and actually understood what your options were, again, know what you know, you could have structured that deal differently. You could have had seasonal payments. So you could have had 8 payments at high and then down low for the rest. And you can match your cash flow and your seasonality to your financial products. And the amount of people I see getting, you speak to people getting VAT loans over that period of time, where they've got invoice finance or they extend out their overdraft. Oh, there's other ways of doing it. And, if you go and structure them properly, you can save a lot of money through the year. And the other bit is, where people go, oh yes, but my payments are higher later on in the year. But actually, depending on the time you start your agreement, your actual interest payments could actually be considerably lower overall by structuring it better. And structuring makes a big difference in things like that.
I'm with you. Because it's a funny one that with a lot of business education stuff is that you can teach people how to grow and promote and do sales and marketing and management. And that's actually quite easy to teach. But actually, because it changes so fast and the amount of depth that you need, you can't really write a textbook easily on what you do.
Exactly. Well, the last point of it would be, you don't believe the marketing. So the thing is, everybody goes, right, whenever you're buying a piece of kit, so you were managing director of a large manufacturer, after you've gone and spoken to your bank and the bank has said, oh, it's not for us, you will then go, a lot of people, there's a lot of embarrassment in it. People don't want to hear no, or don't want to know that the bank thinks their business isn't as good as they think it is. So what do they do next? They go to the next funder that they've ever heard of. But because you don't know where they sit, where these different things sit in the market, the difference between a tier 1 and a tier 3 can be quite big. But the one in tier 3, because they're getting the stuff that drops off tier 1, they're charging you quite a considerable bit more. But you didn't realize that there's actually a tier 1.5, a tier 2, and there's loads of other funders in that market. But strangely enough, because these guys make so much money because they're getting what should be tier 1 deals, but charging more for them, they market really well. They market really well, and they'll agree your deal really quickly. They'll do it really well. They're phenomenal businesses with phenomenal people.
But as the owner, it costs you a fortune. Yeah.
Well, they did not say they cost you a fortune, but they just cost you more.
Yeah.
But you just didn't realize that there's that in the middle tiers. And going forward, whenever now banking appetites, if you think now how many businesses are going to be absolutely devastated by COVID-19, the tier 1 banks aren't going to go, at the minute, you think, where I said at the start that the number of bank managers in the area went from 100 and 150 or so, whatever, to a quarter of that now, but they've still got the same number of clients. They're not going to want to take, coming out of this, the lion's share of the risk.
Yeah.
So this is going to open up the market. This is going to see people move from funding at tier 1. They're going to have to come down. They're going to have to spread their funding out. You're going to have to use the market, because the banks aren't going to go, you might have had a brilliant business 3 or 5 years ago, and then you've got absolutely devastated, you've over-geared, where the bank is now, moved its credit function to India, has less people, and they've got less time to handle all these cases. They're not going to have time for those cases as well, which is the sad thing, because again, I'm a big person for banking and doing banking well, but the banks can only do so much. The high street can only do so much.